All right, guys, weekend's over. Back to work tonight, Monday evening already. Hope you guys got some rest this weekend. Got a busy week ahead of us. It's back to work tonight, Monday evening. We're getting ready for Tuesday's trading session. Got a lot of wild moves on the charts tonight. Big pumps and dumps and reversals. Not to worry, though. As always, I'm going to cover all my favorite trades in tonight's video to give you a game plan, a simple game plan to make some money on Tuesday. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Tuesday is not going to trade itself. Let's get into these charts. Where are the best trades setting up here for tomorrow? Like I said before, right? Very wild day today, right? Big pump up, big dump back down in, and you can see everything's pretty bearish right now. Everything pretty bearish right now across the board here right now. Now, nice strong moves down right now. We definitely want to short some pops, but I'd be lying to you right now if I said I didn't think the buyers had a chance to rip this thing going back higher, right? That big V top that we saw earlier this afternoon. So we've got a lot to cover in this video tonight. Got some really easy setups. Again, kind of a weird, kind of wild session today, but I think by the time we're done tonight's video, you'll see I've got a pretty simple way of looking at this to help you guys make some money for tomorrow. So we're going to jump into these charts here in 2 seconds. Before we do, though, tomorrow, Tuesday, not your average Tuesday. We get Jerome Powell speaking tomorrow at 9 a.m. Eastern time, and so you do want to be aware he will probably put a bit of the skids in the early part of the morning tomorrow. If I had to guess tomorrow, I would guess after the U.S. Open, 9:30, 9:45, into that kind of second half of the morning session tomorrow will probably be where you get the best setups. Now, obviously, that's just speculation, right? We will always trade whatever the market gives us, but be aware, whenever Jerome Powell, he is the head of the Fed here in the U.S., whenever he speaks, people do listen. And remember, right now, the Fed has been pretty consistently telling us they're going to keep on raising rates. They got another a rate hike expected at the end of this month of January. So most likely, Jerome Powell will keep on reminding us that inflation is not under control just yet. Don't get your hopes up. No rate cuts coming this year, and expect higher rates for longer. So, as always, be careful overnight ahead of these big Fed speakers. Be careful around that news number tomorrow morning. Of course, we'll be in our trade room. We'll get our charts all prepped up, of course, and we'll kind of watch the fireworks and watch the reaction around that Powell speech tomorrow. So tomorrow morning, 8 o'clock Eastern time, don't miss the trade room. Get a front row seat for that Jerome Powell speech later on this week. Later on, that's the CPI number. Got a busy week here this week. Like I said, hope you got some rest this weekend, because the first full week of the new year here should be a really good one in our trade room. So keep it in mind for tomorrow, right? Again, whenever Powell speaks, people are going to listen. And remember, trading is like riding a bicycle. It's easier when it's moving. And we'll kind of navigate that more tomorrow in our trade room. Now back to our charts here. S&P, Nasdaq, oil. I'm going to cover all my favorite trades across all three of these markets tonight. Make sure you watch all the way to the end, guys, because you will learn something new, different trade ideas, different advanced tactics all the way through this video. And I do try to save the best stuff all the way to the end. So give me a reason to stick around all the way to the finish. Why don't we grab the S&P and the SPY to kick us off here tonight, and then we'll go over to the Nasdaq and we'll wrap things up here on the oil here. Now, first of all, here tonight, all of these charts are tick charts. You can see all the time frames in the upper left-hand corner. This is the 21 EMA. I get a lot of questions about that. And be aware, too, the S&P and the Nasdaq, the SPY and the QQQs are very similar. So a lot of this will be very interchangeable. What I talk about on the S&P can be applied to the Nasdaq and vice versa. So there's a lot going on this chart right now. Here are some key insights that we have that are kind of tipping us off to where the best game plan to make some money for tomorrow is. Now, this time last week, right? Last week, we had a pretty significant bear bias on that 60-minute time frame. Right now, because of that really strong kind of multi-day move, if you recall, on Friday afternoon, we can have that short squeeze after non-farm payrolls. So really, this is kind of a multi-day, very, very strong, very big move here. And And anytime we see a real strong move like this, what do we expect? A pullback, right, and a retest of that high. Now, it's quite obvious that pullback didn't exactly get a retest of that high, and that's really where I think a lot of the most challenging part of this for tomorrow. And again, I think I'll give you a pretty good game plan here on this. So we're very mixed right now. I would say right now, if somebody asked me how would you describe kind of the bigger picture on these markets, I would say we're definitely still bearish because we haven't held a pullback yet. But the strength of that move last Friday afternoon into the early part of today's trading session just really tells me that even though we expect bears to come out and look to short some bounces right now, we really have to be aware of the potential for this to kind of V-bottom and snap back up to retest the high. That is kind of one of the biggest challenges, and that will be a big part of our analysis here tonight. You will learn a lot in this video, and hopefully we can use this to make a lot tomorrow as well. Next thing, again, is strong moves in both directions, right? So big, strong move wants to be retested, but recency is a very important part of this. The most recent move was very strong for the bears. Anytime we see a strong move down, we expect a pullback and a retest of that low. Now, once they get that low, do we get a reversal off of that low, back up to take out that high, or do we get a breakdown, right, through that low, undoubtedly trying to go down into that big trading range where we were late last week, right? So that's what's, again, kind of the most complicated part of this. Now, this pop and grind channel, this pop and grind down, is giving us a really good kind of clue here as far as where some of the best levels of resistance are going to be here. And again, with that big bear move down, we have to expect those bears are trying to short this. If they fail, obviously buyers will try to go back up and retest the high. So what are my favorite trades for tomorrow? And what if they fail, right? What if they fail? Whenever I see one of these pop and grind moves, my favorite trade is to always wait for a pullback, get above that 21 moving average, run into some of this overhead resistance I have marked up, and basically, and this is where, again, this is where that strong multi-day move comes in. I have to anticipate now that buyers are probably going to look at this as just one big, really deep pullback these last 2 days of rising prices. So I have to expect that buyers are probably going to try to rip this thing and run this thing back higher, and that is where we have some money we can make here on the sell side. Most recent momentum and the long-term momentum is still very bearish, but if I can trap in some of these buyers, right, if I can get these buyers to come in and try a couple times or take it higher, I now have their stops sitting right where we want them. And if you can sell right into those stops, that's an easy way to make money in a bear move like this. What I'd like to do is get that trap high right here, just above that prior high, get that nice strong signal. I call these two-try failures. Two-try failures. You guys are learning about these patterns, obviously, in my free trading course. Two-try failure, and then as we go lower, don't forget where the market wants to go, right? It wants to retest that low, and so we can grab what I call a failure into pullback combination. So think about that as we pull back. Get that pullback, trap in some of those buyers who are trying to force that retest back up to retest the high. Use their stops as fuel, right? That's where the money is made in any of these strong moves going lower. And then don't forget to grab what I call a failure into pullback combination. We talk a lot about that entry pattern inside the free trading course. Now, it was a pretty wild market today, pretty wild market. It wouldn't surprise me at all if we saw a real sharp pullback and then into another kind of crazy swing, right? Let's say, for example, we get a really sharp pullback now, but now the bears come in and they just tackle this thing and it pops up and grinds back down again. You know, remember, it's an overall bear market, right? So it would make perfect sense as it pops up, more bears come in. The problem is when it pops up like that, it can be difficult to pick the top, right, of that move here. These are pretty easy. Mark off that low. We call these pop and grind channels, just like this one, right? Mark off that low, mark off that high, and repeat after me. The first test is the best test. I love to look for bull traps, either traps or buyer failures, right? All the same stuff, all the same entry patterns I talk about in the free trading course. Which reminds me, I've been talking a lot about the free class, a lot about traps and failures here so far. I know that most of you guys and gals have taken the free trading course. You've learned all of these entry setups. I love to get screenshots from you guys making money and stuff every day. But listen, if you're watching for the first time right now, if you haven't taken my free trading course yet to learn all the entry tactics I'm talking about, what are you waiting for? Grab that link. I'll put a little link up there for you in the upper right-hand corner. Grab that link, take my free trading course, because the strategy that I teach in that free class will show you a simple trick to know where the winners will be each day and where the losses are more likely to occur each day. And I'll give you 4 different entry patterns to help kickstart you making money on your own account. If you're tired of missing the best trades each day or you're taking too many losses, grab that link, take that free trading class. It's perfect for someone trying to make the jump into a full-time trading career. And most importantly, you'll learn a lot about these pop-ups, these failures, right? These pullback combinations as we go here, right? So pop it up, trapping those buyers, hit that failure to pullback pattern as we go back to those lows. I'm going to talk more about the reversal off of this low in a moment, because I do think that reversal off of that low could also be a money-making trade for us tomorrow in the trade room. But first, though, what if I'm wrong? You know, I always try to think about, okay, I know what I'd like to have happen, but, you know, what if it fails, right? At what point as we go higher can I be a buyer up here? Now, you're going to see right away, this is not easy. This is not easy. Again, we have an overall bear market on the 60-minute time frame right now. But again, look back over from last Friday, right? I mean, this could easily be just one big deep pullback in that big bull run that we saw after non-farm payrolls on Friday afternoon. The challenge is the most recent momentum is so bearish. And when you combine that with an overall bear market, the Fed basically trying to kill the economy by raising rates, et cetera, it's difficult to want to pick this bottom right now. So really what you have to do is you've got to wait for the buyers to show us that they actually do want to go back to retest this high. And what that means is we have to get that pullback. The buyers have to come in now. Let's go over this way a little bit. The buyers have to come in now, and they have to show us, right? They have to show us they mean business. And in my eyes, that means they can't come in and try and fail here, right? That's obviously not a reversal. They have to hold this pullback, and then they get a jump off that moving average, because we have to get what I call a 1, 2, 3 reversal pattern, right? In other words, we have to get that short-term momentum back on the side of the buyers, because we really can't be a buyer until we get those buyers back in control. We're not a bullish overall market right now, if that makes sense. Now, once this happens, the key is, here's the key. The key is we're going to want to go out and find that channel, mark off that high, mark off that low, and the most important thing about buying this market, one of them will be that strong jump, right, off the 21 moving average. The second thing is you almost must have a trap entry. Now, we learn a lot about traps in the free trading course. This would be a bear trap or a trap low. The reason why you have to want a trap on this is because, for example, what is very likely in this scenario is to pop up, get above that moving average, and then as we start running higher, everybody who shorts this thing, right, they're going to get stopped out, and of course the market will kind of flutter as it goes higher. Now think about this. Where does the market want to go? The market wants to go back and retest the high, okay? And I like the idea of the short off that high later on in the process. We'll talk about that in a moment. But what's my biggest concern? My biggest concern is we have to turn this momentum. Once that momentum turns, now we're really high up. I don't want to buy high. I want to buy low. And how do you buy low? With traps, baby. You go out and you find some prior swings and you grab those traps. That's why I say if this thing can reverse, right? right? If it can jump off that moving average, right, and really start to pop, and I would imagine when you see markets make kind of a short squeeze like that, they oftentimes grind, right, like they did here this morning. That grind will give you those prior swings, and you're going to want to buy as low as you possibly can. You're not going to want to buy high because, again, there's a very good chance here we may get that jump up and it may come right back down again. If you're buying as it goes higher, you're walking right into a bull trap, right? So as it goes higher, you really got to get that pop up and then find that trap and get in. Now, here's one more thing I want to talk about. Let's say, for example, we do get that pop up, right? Let's say we do get that reversal, right? Which could be a 1, 2, 3 reversal, or it could be a pop and a grind, right? Going higher. Let's say we get that pop and grind. Let's say we do get that trap and we retest the high now, right? That's the mission to accomplish. That is mission accomplished now for the buyers. Again, it's a multi-day strong move. The buyers want to go back and retest the high. It's an overall bear market. Now, what do we do at that high? Well, this would be a great place to look for either a breakout going higher, and unfortunately, that's going to be a little bit too much for this video, but that's okay. Tomorrow morning in our trade room, we'll cover all that stuff tomorrow. That's why I have a trade room, so you can be there with me. We see this stuff happening. What I love to do, though, is once they go back to retest the high, go looking for my favorite reversal pattern, a crown reversal. Now, crown reversals are just like two-try failures, but they're a little bit bigger, right? What I mean by that is you want to wait for it to pull back. Buyers try once. Remember, this is a horrible spot for buyers right here, right? Why? Because they're buying high, right? They're buying right into that high right now. We don't want to buy. We want to buy low, right? So buyers once, buyers twice, and that trap high, that's a crown reversal. Again, what we're doing is we're getting the buyers to take the bait here, get them to buy right into that level of resistance. Overall bear market, nice strong signal. We call these crown reversals in our trade room. I like that short. What I like a lot is I'd love to get this thing to get up, right? Retest the high. I'm obviously simplifying this right now to keep the video a little bit shorter. We'll go over more of this tomorrow in our trade room. What I'd love to do, though, is get something like a 1, a 2, get that crown reversal, and then as we make that move down, this is where the easier trades get. Mark off that low, mark off that high, find that new hidden channel, and then as always, first test is the best test. Now, I love traps, right? I like to grab those failures off resistance in a bear market, okay, and then grab that first test off the high of that channel. And guys, this could be a bull trap, like this example. It could be a buyer failure, right? For example, a lot of times it'll pop up. We'll get below that 21 EMA, above the 21 EMA, the buyers will come in, try to buy that pullback, and you got them right where you want them, right? Failure into pullback combo, all the same stuff, bull trap, buyer failure, pullback combo, all the same entry patterns you guys are learning in that free trading course. Now, where do you think the market wants to go at that point, right? Where do you think the big objective is next? Oh, it's easy. Back down to retest the low. I like this little sequence here. So again, we know what we want, right? I know what I'd like to get. I'd like to get this pop up, trap it in, right? Or pop up and V-top into that pop and grind. But again, you got to be prepared here. Again, this may be nothing more than one big deep pullback. It may pop and grind going higher, and that will be, again, you got to get that trap, right? The trap will be really important to buy low. Once we get up there, 1, 2, back down again, and we're shorting back down to retest it. They may end up filling this into one big, massive trading range. Here's we go into Powell tomorrow and CPI coming later on this week. So that's my vision. And again, we'll see what we get tomorrow. That's my vision on as the market goes higher. Now, there's a lot of ways, more things to talk about here right now. For example, we talked about what if we go up and retest that low? Right? Can I buy that low? I think you definitely have potential. What if it breaks down and goes lower? What if it keeps going lower? Right? What if it keeps going lower? Then what do we do? Because again, we're an overall bear market. Why don't we grab the Nasdaq? Let's talk about the NASDAQ here for a second, because again, you'll notice it's all very similar, right? The S&P and the SPY, the NASDAQ and the QQQs. The NASDAQ is pretty much the same thing, right? We have an overall kind of mixed bias. And I say mixed bias because we are overall bearish right now, but that 1.5 day move, I guess you might call it a 1 day move. It was basically Friday afternoon into the early part of today, the first half of today. So we have that big 2 day move there, right? So that 2 day move is a big, strong move, which is why I would not be totally surprised if this thing snaps right back up and then comes back. That I wouldn't be surprised at all about this. The most recent momentum, though, see how the bears come in and jump off that moving average? Once the bears jump off that 21, just like the buyers jump here, right? When the bears jump off that 21, that's a bear market right now in the short term. I'm a short-term trader, right? So I always follow short-term momentum. And like I mentioned on the S&P, when you get a strong move like that, the goal is pretty simple. Get it up, trap in those buyers, use their stops as fuel, and sell it back down to retest. Now again, because of the overall kind of craziness that we saw today, I'm looking for that two-try failure, like I mentioned, right, on the S&P. So a lot of this, again, I'm not going to go over it all again right now on the NASDAQ, but everything I talked about on the S&P can pretty much be applied here. The NASDAQ. Okay, couple things I want to talk about here right now. I mentioned earlier that I really don't mind that double bottom reversal. So one thing to keep in mind is we go up, we trap in those buyers, and we're back down to retest the low. Now, if I want to be a buyer down here, how do I do this? Well, I have to basically first of all, what is the momentum direction at this point? Right? What is the direction of momentum? We're long-term bearish and we're short-term bearish. So if we end up back at these lows, we're not a bull market any longer, right? Yeah, we're definitely a bear market. So if I want to be a buyer, I need three things to pick a bottom. One, I need a major turning point, like a double bottom, right? Or a major support level like that 1183 and 3/4. The second thing is I need to see signs of exhaustion. This is where we use the two-try failure or two-try rule, right, as we call it. I want to see bears come in and show me they're having trouble getting through that low. Remember, the bears want to go through that low. They want to break out going lower because like we have in the S&P, the NASDAQ also has that big, juicy range just begging to get re-hit this week, right? On the S&P, on the NASDAQ. Look at a 60-minute chart. And you'll see a big old range right below us. Ranges act like magnets. So one, if I want to be a buyer off of that retest of that low, I have to, I got to retest that low, major turning point. Two, I need to get some signs of exhaustion, which we assume are the rookie traders, right? Because professionals by nature are selling high. They're not selling low, are they? And then once we have the signs of exhaustion, then we need some sort of catalyst. And that's where we like to run those stops. Very, very simple game plan here. If I can get that short off the high, take some profit at that low, see if we can get some rookie sellers to take the bait, right? To kind of dig their own grave into it, and we can buy right into their stop losses. Now, where do you think a good target would be on that reversal? That one's easy. It's right back up to retest the highest point of that pullback. And in this particular example, I would definitely keep a runner open because, again, of that huge move, it wouldn't surprise me. Like we saw last Friday, the bears come in, they make their money on the pullback, and then late in the day, it ends up ripping and running back up to retest the high. I don't mind that, what we call a double bottom reversal. It's basically a two-try failure pattern, trapping in those bears, using their stops, because again, the easiest money you're ever going to make in trading is when you're buying off support and the sellers are caught stuck in a losing position. They have nowhere to run. They have to buy their way out. Now, the next big question is what if we go lower? There are, for the most part, two kind of basic ideas of as the market runs lower. The key right now, though, is As we go lower, I want you to start thinking like a buyer, right? So for example, we have this big, and again, this is the same thing on the S&P. Big move higher. This could easily be, right? This could easily be a place. Remember, both the S&P and Nasdaq right now are sitting at some of these prior big highs up here. Great spot. Right? Great spot to be a buyer. Again, I'm not quite convinced the buyers have control of the overall momentum right now, but they have a good shot to take control of that for tomorrow. What you want to think about right now is think about if I was a buyer here, and that will tell you where the best shorts are going to be. What I always tell my students in the trade room is anytime we see a really big move, what I do is I wait for a pullback, right? I wait for buyers to try once. I wait for buyers to try twice, and look for a bull trap right above that high, right? So if you want to short a bull market, right? Short that bull market. Again, this is kind of a multi-day move, right? Last Friday, this morning, the buyers want to go back to retest the high. As they pull back, think like a buyer. As the buyers try to buy it once to go back to retest, they go lower, they try again. You could almost guarantee, because of that long-term bear bias, if the buyers can get that 1, 2, this is where the best trade short will most likely be right here for tomorrow. And you think about it, right? If we do get that move going lower, think about now drawing a channel off that low, up around that high. And we've talked about this a couple times already, right? You've seen this illustration in this video so far. That's kind of what you want to think about. This is obviously a very bigger picture, right? It's a bigger kind of zoomed out version of the chart in front of us. But this is a scenario that you're thinking about to short this thing as it goes lower, right? So as it goes lower, 1 try for the buyers, 2 try for the buyers, and think about now those channels coming down, right? That is most likely where the best money will be made here. And again, the reason for that is because we're at support. The buyers are now in, and then if we get that nice, you guys learn a lot about these trap signals in the free trading course. If we can get something like this, where we get that nice juicy red candle right there, think about all the buyers who that is their nightmare, right? That is the worst case scenario for them. All their stops are sitting down here. If you're a buyer and trying to buy this deep pullback right now, and you see this thing trap high with a big juicy red candle, you're probably going to get out early. You're probably not going to let this thing come back down and take your stop out. This, in my eyes, is the best way to make money on this if it does keep on grinding lower. Find those prior swings, keep that channel in check, right? Keep that channel. And again, the same thing applies on the S&P as well. The only kind of other kind of variable about this would be, let's say, for example, that, we open up and we pop down, right? It's a real strong pop down, and it kind of goes into a grinder like that. That will be something where we go out, find that new channel. It's the same thing though, right? It's the same thing. We're still trying to get that pop up, right? And short that pop back down, whether it be a bull trap above that high, whether it be a pop up, get in above that moving average. Buyers come in, they foolishly try to buy that pullback. Remember, strong move, they want to retest that low, let them buy into that pullback and hit them right into those stops and get that retest of that low. And again, I want to repeat, don't be surprised because of Powell tomorrow and just the wild nature of these markets right now. Don't be surprised if it rips higher. But that's not a reversal, is it? No, it'll probably rip higher here. If it rips higher, let them once, let them twice, back down we go. Or that V-top and that grind, right? They kind of pop and grind, going lower. We talked about these earlier, right, on the S&P, right? And again, if they can miraculously at that point hold that pullback and jump, right? Okay, that's a reversal. Mark that high, mark that low. And looking for what? We're looking for bear traps, right? You got to get traps on this move going higher because, again, as we go higher, you're worried about buying too high here. That's the challenge we have in these markets here right now, right? Because in order for us to get that momentum turn, it puts us in a relatively difficult spot because we're buying really high here. So as the market goes, right, if it keeps on going lower, remember, keep on looking for those trap setups, right? Again, it'll be off some sort of channel, off that high, trap setups, buyer failures. Some pop up though, we can then short into it because we don't want to sell it, right, as it's going lower. We want to sell it as it's going higher here. All right, guys. So that's pretty much the game plan as we, as we go lower. Right now, again, we're going to see what we get here tomorrow morning. We got Jerome Powell, of course, on the microphone tomorrow at 9 a.m. So this might get a bit crazy in the pre-market tomorrow morning, and I'll see you guys tomorrow in the trade room at 8 o'clock Eastern time. Over on the oil right now, oil is, as you can see, there's a lot going on the oil chart right now. Oil is a little bit, it's quite a bit of noise on the oil chart right now, but I think you'll notice when you kind of boil it all down, a lot of this is really kind of the same game plan as we had on the S&P and the Nasdaq. Key insights right now, again, a mixed overall bias right now. Why do I say a mixed overall bias? Because again, overall we're bearish, but we have a very strong move up, right, into a trading range. And so would it surprise me if we pull back, end up right back? No, it would not surprise me whatsoever, right? So that's one big kind of, again, that's one of the most confusing parts about the market right now. The next thing, of course, is the bear range, okay? So it's bear, right? We basically had a bull market into a trading range, and then see how they kind of break out, they pull back, and see how they jump, right? That's a 1, 2, 3 breakout. That is a range breakout. So in all reality, most of the time, when I see a market break and rip out of that range like that, okay, this range is now not worthless, but it's not the most important clue anymore. In these scenarios, when they break out, hold the pullback, and jump, right, we talked about these earlier, if to jump off that moving average, we go now into that trading range now. This is a bear market into a trading range. Now, how do you trade a bear market into a range? You find levels of resistance, right? Beautiful little bear channel right there. You find resistance zones, you wait for the pop up, and you short this thing back down again, right? That's my favorite trade in a bear market into a trading range. Now, again, you can see there's a wrinkle in this, right? This is where we got to be careful, right? Because again, you've got that big multi-day, kind of that big move going higher. So as we do go higher, we have to respect the fact this could fail and continue right back up into that range. And that's why on all three of these markets, I want to give those buyers a little bit more of the benefit of the doubt, let them try a couple times, right? And then use their stops for that short back down again. Does that make sense? Right? Hopefully that does. I know this is not simple. I know it's a bit complicated, but again, I think as long as you can understand right now, recency is the most important factor when it comes to short-term trading, and right now recency tells us we're bearish into that trading range, but because of the sheer size, right, of these big moves going higher here, we have to at least anticipate the market may rip higher and retest those highs here. All right, so you'll notice again, bear range, hidden channel, very similar here, right, to the S&P 500 and the Nasdaq. So as we go higher, right, I want to get up. I really like how we're using the amount we went below the range. We call these the pendulum swing, right? The amount below the range is the amount above the range. Resistance, prior swing, resistance, overhead. Again, get them up, trap in those buyers who are trying to go back up to retest the high once, twice, use their stops as fuel for that short going back down. Grab that, right? Grab that new channel and find that short off the top of that channel. And where's the objective? Back down to retest that low. Almost identical to the game plan that we saw on the S&P and the Nasdaq. It may pop up and V-top. Okay, just be aware of that. It may pop up and V-top. V-top grinds back down now. Okay, find that new channel. Short that first test, right? Back to retest the high. The big problem we have on the oil right now, this is not easy to be a buyer because, again, with the short-term momentum being so bearish right now, if we pop up, right, we hold that pullback, in order for me to want to buy a bear market, again, long-term bear market and short-term bear market, in order for me to want to buy a bear market like this, I have to get, well, that is without really being a gambler, right? Without really sacrificing the odds of success, right? The way you safely buy this is to let it pull back, make those buyers prove to us they actually want this, and they have to jump off that moving average. Just like on the S&P and the Nasdaq, the problem is by the time we turn this battleship around, by the time we turn this momentum around, we're now right in that high, right? So the idea of buying this pullback right now is not a very good trade, right? I'd love to buy right here. That'd be great, but I don't have a crystal ball, right? I can't tell at that point if this bear market is going to reverse this point, right? That's a 30% trade right there, maybe a 40% trade, right? This is a much more reliable trade up here, but again, it's not in the right location. So it's that same problem that we had on the S&P and the Nasdaq, and this range, right? This range above us it's tricky, right? So as we go up now, it's that crown reversal, right? It's that move up, it's that one, it's that two, it's that trap and back down, right? We go up, it's that one. It's that two, it's that trap and back down. We go up, it's that V top and grinding back down, right? Finding that short off the high. Or as I said earlier, maybe this does really reverse, right? Maybe it does retest those highs. Maybe the buyers do come in and they rip this thing running higher. Could easily happen tomorrow. Right? If it does, again, we're not going to buy into those highs. Once they do break higher, though, we go out, we find that new channel top, we find that channel bottom, we drill down, find those traps, find those seller failures, right? And we're buying that first test off of that low. All right. So that's why I said this is why this particular situation today, not easy, right? Not easy. So a lot of traps, right? A lot of a goal of staying patient and waiting to trap traders on the wrong side of it. If we do rip higher, there's a big juicy magnet, big range overhead at that 79, 60 area, 79 even area, and of course, if we go lower. Right? If we go lower right now, what's the game plan? Same idea, right? If we do keep going lower, buyers once, buyers twice, keep looking for those channels, keep looking for those traps, right? Same game plan we just talked about on the S&P and the Nasdaq, right? Because as we go lower here, we have to expect, right, with that big move up like this, we may see more buyers coming in trying to buy this. I'm not going to want to sell it as it goes lower. I'm going to want to short this thing as it pops up, either with bull traps or buyer failures. You'll see examples of those entry patterns inside that free trading course. All right, guys, the range below us on the oil is a very convincing magnet. Now all we need here is to get up, trapping some buyers back down, right? Or get this thing going lower here and pop it up so we're not selling so low, right? That's the key here right now. Sell high, sell at resistance, don't sell low. Right? And we'll see if these buyers can pull a rabbit out of their hat here for tomorrow. At this point, it's a wait and see. The range below us, big targets down below. And I'll tell you, if the bears, if they get what they really want now, think about this big range we saw last week. Think about the amount we went above today. I'm going to go below today. But I'll tell you, there's a big bullseye down around that 71.50, 71.33 area. I got triangle levels down here. So if the buyers can't hold something up here, this could easily collapse, not only back down into that trading range, but all the way back to that full rotation. Pop up, buyers fail, rotate back down, triangle low here. You can easily see on this chart right now, easily see that expanding triangle right here, right? The only variable right now is the strength of that pop up. That's the big variable that we have here right now, right? So bears have the long term, but the bulls have a little bit of that short term edge that's really keeping us on our toes here for tomorrow. Now again, a little bit of a complicated strategy for tomorrow. So don't forget, tomorrow morning, 8 o'clock Eastern time in our trade room. That's the place to be, and we'll navigate around all the stuff here. We'll navigate around Jerome Powell tomorrow, and we'll have a pretty good day. We always seem to have a pretty good day around Jerome Powell in our trade room. Guys, don't forget all the links I've talked about, right? The free trading class links, the membership links. I'll put everything you guys need in the description of the YouTube video. Don't be afraid to call the office if you have any questions. I'm always here to answer questions about anything that you might need help with, and don't be afraid to use the live chat, right, or drop me a comment in the comment section below. All right, guys, hope you enjoyed the video tonight. Hope you learned a lot, right, and hopefully I'll see you tomorrow morning, and we can trade this stuff together. As always, my name is Joseph. Be well out there, be nice to each other, and I'll see you guys next time. Adios, amigos. Bye-bye for now.